Gold has been considered valuable for thousands of years. Stocks have only existed for a few centuries. So, when it comes to building wealth, which one wins? Here's what's interesting. Warren Buffett, one of the richest investors alive, has made his entire fortune in stocks, and famously called gold one of the worst long-term investments you can make. But millions of people still buy gold believing it's the safer bet. So who's right? Today we're settling this debate once and for all with actual numbers, real history, and Warren Buffett's own logic. What is gold? Gold is a physical metal that humans have valued for thousands of years. It doesn't rust, it's rare, and it's universally recognized as valuable. People buy gold for two main reasons. First, as a hedge against inflation. When currency loses value, gold often holds its purchasing power. If paper money crashes, gold stays gold. Second, as a safe haven during crisis. When stock markets crash or wars break out, people flee to gold because it feels tangible and secure. You can buy gold as physical bars or coins, or invest in gold ETFs that track gold prices without holding the metal yourself. Gold doesn't pay dividends or interest. You only make money if the price goes up. What are stocks? Stocks represent ownership in real companies that produce goods, provide services, and generate profits. When you buy Apple stock, you own a piece of a company that sells iPhones and makes billions in profit every year. Unlike gold, which just sits there, companies grow. They hire employees, build factories, create new products, expand into new markets, and increase their earnings over time. Here's the key difference. Gold is passive. It doesn't produce anything. Stocks are active. They represent productive assets that create value. Warren Buffett's famous argument against gold. Warren Buffett has been very clear about his view on gold. He once said that if you took all the gold in the world and melted it into a cube, it would be about 67 feet on each side. At today's prices, it would be worth around $12 trillion. For that same $12 trillion, you could buy all the farmland in the United States, plus 10 ExxonMobils, and still have $1 trillion left over. Now ask yourself, which would you rather own? A giant cube of metal that sits there doing nothing, or all that farmland producing crops year after year, plus 10 of the world's biggest oil companies generating massive profits, plus $1 trillion in cash? Buffett's point is simple. Gold produces nothing. It just sits there. Productive assets like farmland and businesses create wealth year after year. The numbers. Gold versus stocks over time. Let's look at real historical returns. Over the past 50 years, gold has returned about 8% annually on average. Not bad. But the S&P 500, which tracks 500 of the largest US companies, has returned about 10% annually over the same period. That 2% difference might not sound huge, but compounding makes it massive. If you invested $10,000 in gold 50 years ago, you'd have around $470,000 today. If you invested that same $10,000 in the S&P 500, you'd have over $1.1 million. That's more than double the wealth from stocks versus gold, just from a 2% annual difference compounded over decades. And remember, gold doesn't pay dividends. Stocks do. Many companies share profits with shareholders quarterly, giving you income along the way. When does gold win? Gold isn't useless. It shines during short-term crises. When markets crash or inflation spikes suddenly, gold often rises as people panic and seek safety. Gold also provides diversification. Holding a small percentage of gold, maybe 5 to 10% of your portfolio, can reduce overall volatility. But as a long-term wealth builder, history clearly favors stocks. Bottom line, gold preserves wealth. Stocks create wealth. Gold is defensive. Stocks are growth engines. Warren Buffett built his fortune betting on productive businesses, not shiny metal. If you want safety during chaos, hold some gold. If you want to build serious wealth over decades, own quality stocks. Subscribe for more investing comparisons, hit like, and comment. Are you team gold or team stocks?